Hey guys, Akil Stokes here. Welcome back to another weekly trading video. In today's video, we're going to take a look at the important news events for the week to come. We're going to talk about dealing with the ups and downs of trading, mainly pulling yourself out of a drawdown. And of course, I'm going to show you some of the best trading opportunities that are on my radar for the week ahead, including another look at crypto, right? You crypto guys went crazy when I shared with you the trading idea, which we nailed, by the way, on Ethereum on the Tuesday midweek markup. So we're going to bring another opportunity to the table today as well. But first, I want to start off with talking about dealing with the ups and downs of trading, because really that is the point of this video. Yes, I'm showing you trading opportunities. I'm giving you things to put on your watch list, but the idea is for this weekly video to be like a journey, a peek behind the curtains of what it looks like to be a real consistently profitable trader, not just all the BS you deal with on the internet when everyone shows their wins. I want this to be a place where you see the good, the bad, the ugly, and hopefully, bigger picture, end of the year, you see the overcoming of all that obstacles. And I got a great message from a trader that I've worked with for a while now on Instagram the other day, and I want to share it with you because I think it's going to be super powerful and also super relevant to the topics that we've been talking about. So give me a second, let me pull it up and I'll read it to you guys. So Raymond says, "Hey coach, I just wanted to reach out and say thank you in short. Learning from you and Jason about how to treat trading as a professional has changed my mindset and my trading. My results aren't at a full year yet, but I've never been more confident in my analysis and my trading. I just had a drawdown that lasted almost 3 months, which sucked and included 8 losses in a row. The only thing that kept me mentally straight was knowing that I had a tested plan and I put a lot of work into making it. So I focused on the process and not thinking about wins or losses, just the process, the analysis, and following the plan. I now have dug out of that drawdown in the past month alone and hit new equity highs by doing nothing but the habits that were formed, learning from you and Jason day in and day out. Just wanted to say thank you, coach. I've never felt this confident in my trading and it feels great. Sorry for the long message, but I just wanted to share my gratitude." He goes on to say, "I just wanted to show my appreciation. Believe me, if it was the old me that went through that drawdown, I might have blown up and let the trading demons get a hold of me. This time around, all I did was trust my plan and repeat my habits I learned from you each day. I've had drawdowns, but not like this one. So digging out, following the plan was reconfirming in my mind." If you haven't done so already, make sure you check out Raymond's YouTube channel. Great channel. I've shared his videos a few times here on my channel and the response has been amazing. Great technical analysis, great insights on trading psychology. And Raymond is in a unique situation where he's right at that level where he's gone from kind of learning trader, struggling trader to consistently profitable trader, but it's still at the very beginning of that stages where many of these obstacles are still new to him. So if you want some insight from someone that is currently going through it for the first time, which I think is very powerful, make sure you subscribe to his YouTube channel. Great analysis, great lessons. You're not going to regret it at all. Now, again, this is super relevant because if you've been paying attention to this weekly video, last week I told you I was in a little bit of a funk, right? I think I was on a streak where I lost 5 out of my 6 previous trades, and I took my drawdown from, I think, about 22% down to 17%. Well, this week was a little bit different, right? This week I've been on fire. 6 out of the last 7 and brought that move back up from 17 or 18, whatever it was, back up to 24. And it goes to show you that your equity curve, right, your trading results are going to ebb and flow just like the chart. And you can't get too destructive. You can't get too down over your down periods. You can't get too up over your up periods. It's going to move like this. And part of becoming a consistently profitable trader is emotionally, right, and psychologically being able to deal with those ebbs and flows. The rough part is that you don't actually learn how to deal with it until you deal with it. And when you go through that first drawdown, especially trading live, right? You can go through drawdowns and your back testing and your demo trading, and that does prepare you. That prepares you as much as you can. but it is a different feeling when you are dealing with live money. There is a completely different emotional attachment to live money. And that first drawdown with live money feels like you're jumping into the ocean and you're sinking to the bottom, and there is no bottom. You never know when it's going to come. And because there's no light at the end of the tunnel, right, you start to enter that mode where you go from stressed to in de-stress, and right? And when you're in distress, you start to panic. And when you start to panic, you start to flail and splash, and you make your situation worse, right? You elevate your heart rate, oxygen, you use up your oxygen more quickly, and you drown quicker. That's what struggling or failing traders do. Professional traders, traders that have that experience, right? They understand that instead of jumping into an ocean, that drawdown is more like jumping into a pool, right? Which end of the pool really depends on how bad the drawdown is. But because you've overcome it before, you know that at some point there is a bottom. And if you sink long enough, you're going to get to the bottom. And once you get to that bottom, boom, you can really push off the ground and spike up above the water, and think about the spike up as being new equity highs, right? And because you have that belief, because you have that confidence, it's much easier to deal with. You are still stressed, right? You ask anyone that I was working with last week, I was not in a very happy mood as I was losing money day after day. But you understand that it's part of the process. It's normal. It will come to an end, and that is, it is 100% needed, that confidence, that belief, in order to be a consistently profitable trader. Now, the reason why I like showing you this journey on my own end, because honestly, the only way to experience that is to do it yourself, right? Unless you've been through it yourself. And my first drawdown was a bleep, right? But I overcame it, and now I have confidence. But unless you experience it yourself, you don't really know what it feels like. But hopefully in these videos and me showing you and giving you an idea of what you have to look forward, the good and the bad, it gives you a little bit of an edge on, hey, this is normal. I shall overcome this. And Raymond is a great example of that. So pretty cool stuff right there. All right, so let's hop into the charts. We're going to start with taking a look at the news events for the week ahead, because we do have some extremely important news events ahead of us. But first, I got to ask you guys to subscribe. There's about 40% of you that are watching this video, 30-something% that aren't subscribed. Make sure you hit that subscribe button. Make sure you hit that notification bell. I got 2 messages last week that said, Akil, it's great to see you back with these weekend videos. Where have you been? And I'm like, what are you talking about? I've been doing this like every weekend straight for the past 10 years, right? So if you're subscribed, if you have that notification bell hit, you're not going to miss this weekend video. You're not going to miss the midweek market video. You're not going to be upset when you miss announcements about new releases, new workshops, new webinars, all that fun stuff that we put out for free here at Tier 1 Trading. So it takes you a second. Do it. I don't ask for anything else. Just hit that subscribe button. If you want to leave a tip, hit that like button as well. So last week in the live room, we had some good discussions on time that it takes to do analysis. And I mentioned that it probably should take you longer to do your analysis at the beginning of the week. And as the week goes on, shorter and shorter and shorter. One of the reasons that it takes a little bit longer at the beginning of the week is because I take a look at the news as well. So I not only do my top-down fundamental analysis and set up my ideas for the week, I take a look at the news. I figure out, hey, what news events are coming out, what days do I need to pay attention to, all of that fun stuff. And if you're new to the channel, I'm not a fundamental trader by any means. I'm not looking to trade news events, but I do understand that it does have its importance. It does play its role in the market for one of 2 reasons, right? One, we can use it for that hybrid trading type of style that we talked about in a previous video, and that I think I did a podcast last week on it. You can check it out. But also, it could tell you when to stay out of the news, right? Or stay out of the market, right? Thursday this week was a good example where it's like we knew there was an ECB press conference coming on. We knew there was some major inflation related news coming out for the dollar. Probably a day where you want to just, during that time, stay away from the market, wait for the dust to settle before looking for your trading opportunities. That way you don't get caught in that whipsaw where the market goes up and down and up and down, and you always seem to be on the opposite side of it. Understanding news can also kind of give you an idea for what type of week it's going to be. Again, we knew that Thursday was a major day last week. So we had the idea that the market was probably going to do nothing. No one was going to show their hand prior to Thursday. So we would probably see a lot of consolidation. If we know we're going to see a lot of consolidation, we know that we need to be on alert for a lot of advanced pattern formations. And at least me personally, advanced patterns were all of my trades last week, right? Going, I think 4 for 5 or 5 for 6, something of that sort with them. This week's going to be something very similar, right? This week is the return of the Fed, right? Return of the Fed once again, right? Where they took a week off before their meetings, and this week on Wednesday, I believe they're going to make some announcements. But before that, right, Monday is going to be nothing. Tuesday, right, we have some more inflation-related news. Not only do we have Bank of England Governor Bailey speaking at 8:15 a.m. New York time, but we've got PPI coming out at 8:30, right? That's going to be important, right? Because that's going to be a little bit of a precursor for what's expected the following day. So I think that people are probably going to do nothing Monday. They're going to look at this news event on Tuesday and use that to try to guess what's going to be said on Wednesday. And Wednesday is the big day. Lots of news events. We got CPI coming out for Canada, but more importantly, again, FOMC economic projections, FOMC statement. Funds rate is usually big, but there's no changes that's going to happen, so that's a minor thing. But probably the most important thing is the FOMC press conference, right? And again, that's going to be, for me, the press conferences are always more important than the actual statements. The statements are kind of known. They're professionally scripted, so they say a lot of nothing. The press conferences where they have to actually come out and answer questions, and you can kind of get a real sense of what's going on. So I think that's going to be the most important news event on the most important day of the week, which is going to be Wednesday. And you need to make a decision. Are you going to try and trade it, or are you going to stay out? I can tell you what I'll be doing. I will be staying out, but that's going to be up to you. But it's important just to know what's happening in the market. That way you can prepare for it. So away from news, onto the charts. Let's start with pound dollar. So before we get into the analysis, I'll start off by saying this. I'm not really impressed by anything that's happening in the market this weekend. And I actually contemplated not doing this video. I don't want this to be a video where I just come in and give you fluff and just share as many ideas as possible to give you ideas. That's not the goal. I want to share with you the best trading ideas that are on my radar for the week ahead, right? So when I say that in the beginning of the video, I actually mean it. And when I went around the markets this week, there wasn't really a lot that I was interested in. There wasn't really a lot that I thought would be a teachable moment. So I was about to just enjoy my Saturday mornings and ditch it, right? Save myself the 4 hours of recording and uploading and editing this video and whatnot. But I know you guys are waiting for it. I know you're watching and I know you're here and hopefully you still take something out of it. But just know these aren't grade A setups this week, but they are opportunities you can pay attention to. So pound dollar, first and foremost, here on the 4 hour, we've been in consolidation, right? You take a look at the daily, you can just see, right, back and forth and back and forth and back and forth, a very sideways channel, right? Sideways channel doing absolutely nothing. We go down to the 4 hour, you get a clearer look at that channel, and you can see that we've essentially come back to retest the lows. And what you could be looking for here is basically a repeat of what we've been doing, right? Every time we've come to this previous level of support, we've traveled up to the previous level of resistance, and then we hit the previous level of resistance and we travel back down to the previous level of support. So if you are a channel trader, a structured trader, this could be something that could be on your radar. And I was hoping when I looked at this Friday afternoon, I was hoping that we would travel a little bit lower. Personally speaking, I like looking for trades at the extremes. It means that the extreme level was tested. It makes my stop loss closer. Those are my preferred level. We did not get that here, but if we go down to the hourly, we still did get some pretty good candlesticks to end the week. And if you take a look at these last 4 candlesticks, for you guys on the platform that are checking out the foundation course, right, this is where that stuff comes in handy. I know the first course or the second course, I guess it is, where we're talking about candlestick formations and reading it and strong bullish, weak bullish, neutral bullish, all that fun stuff. It doesn't necessarily direct or relate to trading opportunities at the time. But remember, that's purposely done, right? We're not trying to teach you how to trade in the first few courses. We're trying to teach you the concepts, and then later on, you get to see how those concepts actually work themselves into trading opportunities. And this is a good example of that. You can see that our last 4 candles, right? These are all bullish candles, even though 2 of them are red, right? This is a pin bar, right? Price action spiked down. Sellers got rejected, closed higher, right? Or not technically higher than the open, but closed in the upper range, the upper third of the candle. Next candle, same thing, spiked lower, sellers got rejected, right? Engulfing candle, higher high, higher close, I should say. Next candle, obviously another strong bullish candle, higher high, higher close. Sellers tried to push down one more time, ended the week, again, upper third, got rejected. This is a positive sign for some bullish movement, right? Again, I would love this if this were down here, right? From a structural perspective, right? My ideal stop loss would be below this level. You can see that's going to create a large gap. I don't want to risk that much. So the stop loss is going to have to be somewhere around here if you're taking it. Again, not ideal for me because it's not below structure, but again, everyone doesn't trade like me. I understand it. This is, I think, a good opportunity. Look for a buying opportunity to go back across this channel. You may end up getting a double bottom or some action like that as well. You probably have it on the 15 already. No need to go that low for this type of video, but you may get something like this on the hourly as well if we do get another retracement there. But look for buying opportunities here on the pound dollar. Next up is going to be the dollar Canada. We're going to go out to a weekly, right? The rare weekly. Say that 5 times fast, right? The rare weekly setup here. But again, I think this is important, right? Because I want to take a look at the candlestick formations. You can see some of my analysis is already here. What we've done is we've come down to a previous level of structure support, right? Look left. Structure leaves clues, right? We've come to these lows, we've held these lows, and we've started to consolidate, right? This candle right here is a neutral candlestick. It's called a doji. Basically, you have a spike up, a spike down, and a close right in the middle. So the bulls tried to move it up, and it didn't work. The bears tried to move it down, and it didn't work, and we closed kind of like a stalemate, right? You've got 4 of those candles in a row. 1, 2, 3, 4. And then we finally ended the week with a higher high, higher close, showing some bullish dominance, right? So if we're going to continue higher from this level, where are we likely to continue higher to? Well, the next level of structure is going to be this previous, right, new structure low right here around 123.61. So you can look for a trading opportunity from 121.51s to about 123.61s. Obviously, as you go down to lower time frames, it's going to make the picture a little bit more clear. So you'd have to go to this level to look for your actual reasons for entry and whatnot. It is a little concerning that we didn't clear this. I would love to see that clear. But you can look for a buying opportunity here on dollar Canada. As you go down, again, this is going to depend on what type of time frame trader you are. If you're a 4-hour time frame, you may want to lower those expectations, right? You see right here, this is that level we identified on the weekly. As we go down to the 4-hour, it's not really at a relevant level, right? We have this up here, but we just cleared this level of structure. So you may want to adjust it a little bit to this mesh point, or you may even want to be a little bit more conservative and adjust it down to this level right here, 122.68. Again, that's all going to really be based on what time frame do you use for your analysis. And this is why, you know, we had a really good conversation on this topic this week in the live room. This is why you need to be consistent in your time frames, right? You need to know, what is my higher time frame, what is my trading time frame, what is my lower time frames, or rather, what time frames am I allowed to use? Because if you're someone that can use the weekly, the daily, the 4-hour, the hourly, the 30-minute, you're going to get all different types of signals, and you're going to consistently be adjusting whatever you're looking at, because structure is going to be different on each time frame. But if you know what time frames you're using for what, if you know that, hey, I've got to execute this off of the 4-hour, then you know this is your main time frame. This is where the bulk of your analysis needs to be off of. This is the time frame where you need to adjust and really dig into target placement and stop placement instead of like the weekly or something like that. So check out that on dollar Canada. Where to next? Next, we're going to head to Aussie yen. This will be short and sweet. Again, consolidation here. This is very similar to the pound dollar. We're coming down into a previous level of structure support. You see price action dove down here early June, consolidated and then spiked up. We're back down in that same level, and we're starting that consolidation. You can see the inside bar that ended the week here in the 4-hour, right? We go down one more time frame to the hourly. Again, you can see price action came down. We're getting a little bit of relief. This is a perfect opportunity to look for a double bottom or 26.18, and look for an opportunity to trade it back up to our previous structure lows, this little structure shelf right here. You may even get some 382 confluence, probably a little higher, but let's check it out. Oh, look at that right there. Yeah, some 382 confluence right at that level as well. So 84.64 is good level to trade it to. Again, we don't have a technical double bottom yet,
But if you get one, that'll be a decent entry. You can kind of get an idea for what your risk reward is going to look like in advance to see if it meets your requirements. What are we looking at? 11. So you're probably looking at something like this, 27. Me and math aren't good right now. 27, something like that for risk reward. Not a bad risk reward, not a bad trade setup. Again, I mentioned before, these aren't grade A setups, but something to give you guys for the weekend to take a look at. Oh, and it gets below structure, the stop loss, which is key. That's unlike the pound dollar trade we talked about. Next, we're going to go to the dollar index. Again, similar situation. You're seeing this a lot in the market. So again, we had big rallies to end the week, and now we're seeing a little bit of relief, right? Some profit taking before the week ends. That's why we're getting a little bit of those retracements. And we may see some continuations of that relief or corrections as the week starts. My guess is we'll probably see more consolidation, but hey, if it's counter trend traders, we're only looking for a short move anyway. But same thing, dollar index, right? Look left, structure leaves clues, identify. We've just come into a previous level of structure, these structure highs right here. We have refused to violate it. If we go down to the hourly, you're gonna see that little bit of that relief. Your first chance entry would have been right here. If you're aggressive, that lower low, lower close after this beautiful candlestick combination, right? Looking for a more conservative reason to get involved, look for that double top. So if we get a little bit of retracement right here, right? Look for that double top. We can look to trade it down to our previous inside level of structure. So very similar to, what was it, Aussie yen we just looked at, just kind of inverse. Now, something you need to pay attention here, we've talked about morphing patterns before. Not sure if we did it here on YouTube, but definitely with the traders on tier 1. Because I'm expecting consolidation, watch out for that morphing pattern, right? This may start as a double top. It may end up an ascending triangle or a high and tight flag. Who knows? But do keep that on your radar and understand if and how you need to make adjustments if that were to occur. Next, we're going to go to the Aussie S&P. You can see here on the daily, we ended the day, the week, I should say, with a higher high, higher close. We'll look left, structure leaves clues, right? You can see, boom, above structure as well. Typical pullback trade. We've looked at this with a lot of the indices we've discussed this year. And again, you want to have probably a longer bullish bias when it comes to trading indices. And this is going to fall right into that. So ended the week higher high, higher close. You guys know me by now. Look for a pullback trade. So look for a pullback into previous structure and a chance to establish your position going higher. If you're really short term, meaning if you're allowed to go down to the hourly chart here, right? You have a nice little structure shelf right here. This is going to be your first area. So if we can get a small retracement, and again, strong trends should have small retracements. If you can get a small retracement, you can position yourself right at a retracement of that level. That stop loss can be right below those lows. And of course, you can ride it and follow the trend as far as you want with this one. So keep an eye for a pullback early in the week and a chance to get on the next extension higher here. Lastly, we're going to take a look at Ripple. US dollar. I'm not a crypto person at all, and I've got a lot of emails saying, Nikhil, I didn't know you're in crypto now, blah, 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 blah. Maybe that's the reason I've had so many scammers this week, so many fake Nikhil accounts on Instagram, because they saw I did a crypto video, and now they're looking for a chance to take advantage of kind of thirsty crypto traders. But I'm not a crypto trader. I do work with a few crypto traders, and we do analysis on them because, again, technical analysis is the same right now. The personality of the crypto market, I think, is a little bit different than the Forex market, just like the stock market is a little bit different than the Forex market and the crypto market. They all have their kind of intricacies. But as far as analyzing and seeing what you see on the price chart, it's all the same. And we showed that with the Ethereum this past week with that flag breakout. So here in Ripple, we have two things. First and foremost, you're a little bit off of it now. But we're coming off a bullish cipher pattern, right? So if you're looking for a reason to establish a position down at this area of consolidation here on the hourly, you had this. You had an X to A to B, B to C, and a CD completion right here for a bullish cipher. Now, I bring this up because it hasn't completed yet, meaning it hasn't hit what the would-be targets are. So if you do get some type of bearish move to start the week, it could be an opportunity for you to re-enter in a bullish cipher. Bigger picture, right? I'm going to zoom out a little bit to the 4-hour. We also may have, right, within all this consolidation, right, we may also have, it looks like we have another cipher as well. Well, I'll check that out. We may also have a few other things happening, right? We may also have a deep bullish Gartley. I'm going to erase this cipher stuff right here. I'm going to look at this as being my initial X to A leg, right? So my impulse leg, a clear break of structure right here. I'm going to bring my Fibonacci retracement on, swing high to swing low. You're going to see that we pass the 618. We don't hit the 786, which means I am on Gartley alert. It's also going to be a deeper Gartley, which are the ones I prefer because they give me a better risk reward. So we're looking at a potential X to A to B, B to C, and C to D. Now, if you want to be fancy, right, we've talked about this on the platform. I'm even afraid to mention this on YouTube, but we've been talking about aggressive C's on the trading platform because we have a few traders that are looking into it, right? If you guys are interested, talk to Andrew Curry, talk to Greg. They're actually digging into the concept of trading the aggressive C, which means aggressively trading the C to D leg of a pattern instead of the D completion. I don't recommend doing it just for your average trader out there because I think you can get into a lot of trouble when you're not disciplined with it. I know that these two traders are extremely disciplined, so they're going to go about it the right way. But in this opportunity, this would be an awesome excuse to do so because if you remember, the cipher pattern right here could actually be an entry reason into the C leg of the bigger Gartley pattern. So again, more so for tier 1 members, YouTube members, especially if you're new, don't worry about it. You can get into a lot of trouble. I had to shut down an entire Facebook group in the past because of this aggressive C. It's a very sore subject for me because people do dumb stuff. Let's just put it that way. When people do dumb stuff, they lose money. But this would be one where you have one signal that can give you an entry into another signal. But so you got the bull cipher, you got a potential bearish Gartley up here as well. That's again looking for a move like that. If we zoom out even more, I'm just looking at this for really the first time. We may even have, let's see if we have a cipher here. We may or may not. Let me check. If we don't, then we'll just wrap things up. But yeah, you may, okay, look, you may have a bigger cipher here too. So bigger picture, we may have another bigger pattern formation. This is something to look for or keep on your radar in the future because, you know, who knows when I'll look at a crypto pair again, but an X to A to B, B to C, C to D, and that's going to be another potential bearish cipher, something that gives you a move like that. So that's a wrap for this week. Remember, subscribe, hit that notification bell. That way you don't miss the next video. I've been doing the midweek markup on Tuesdays. There's no email kind of promoting that, so it just appears on the YouTube channel. Usually it's a short, sweet video checking out a new trading opportunity that's on my radar for the week or following up on something that we talked about in this video. Last week's video, the opportunity hit within like a few hours after it. So if you're looking for ideas, don't be late. Check it out right away. Aside from that, I hope you guys enjoyed the weekend. If you're looking for more free content, make sure you check out www.tier1trading.com. We've got a cool free webinar over there. All it takes is a click of the button and it's yours. All right, until next time, plan your trade, trade your plan. Take care.